start with just the economics. Everything Ewan has just said, the markets are assuming this is going to be temporary and the snapback will be strong. Is there any reason to doubt that?
No, not at all. I think the other thing which markets are probably also looking at is the backdrop that we were in. We just got the global PMIs data yesterday, and that was very strong. We had a 1-point plus jump in the global headline PMI, and we had 1.9 percentage point jump in the new orders index, which is a sub-index, which is more forward-looking. So we had pretty good data in terms of what's going on in the global economy before we got this virus. And so now, as we're getting some information of situation beginning to be coming in control, markets are looking ahead of that and saying that, look, we'll probably get that resumption of recovery as soon as the situation is controlled.
All right, so that has big political implications if that plays out. Iowa, are you willing to set that aside as almost a traditional political debacle?
Yeah, I mean, I think RIP caucuses, right? I doubt we'll see caucuses again in the 2024 cycle. Look, I mean, what we've been talking about with our clients about Iowa and New Hampshire is that even though they capture the imagination, from a delegate's perspective, they really don't matter. Now, they can matter from a momentum and from fundraising perspective, but what really does matter, I think, from an investors and markets perspective, will be March 3rd. By March 3rd, almost 40% of the delegates will be decided, and we should either have a very good idea of who the nominee is or who the front runners are, and if we don't, then we would say the chances of a broker convention actually increase. And not many people are talking about a broker convention, but if we think the caucuses are messy, a broker convention would be a lot more messy.
So where is Wall Street in your estimation in terms of what they're expecting, who the Democratic nominee to be?
Well, look, I think that if the predicted markets are any indication, I think there is sort of concern that a progressive left candidate would be the nominee, but I think it's way too early to tell. The Iowa caucuses, when we get the results, that will be what the first indication. We'll see, whether Pete Buttigieg, how well he did, whether Joe Biden can still remain in the race. But I think it's just the point here from a markets perspective, it's way too early days. So we would fade all the prediction markets at this point.
Chetan, you guys have been sort of less upbeat, I think, on the outlook for the economy than some of your fellow Wall Street peers. Do you think that's going to factor into the election?
Probably not, because I think we're not really forecasting the economy to be that bad that it sort of weighs on the politics at this point of time. And we, from our public policy analyst team's perspective, economy will matter, but not so much unless you are really in a bad shape. So I think to the extent to which we are expecting regional growth to be around 1.8%, it should be less of a concern.
Are interest rates telling us anything? We saw the yield move up slightly after we just got those numbers from Rick, but we're still at, 1.6 or so on the 10-year.
Yeah, I think the interest rates are basically telling us that there is a concern on global growth outlook with the developments on coronavirus. And remember that the starting point of global growth was 2.9% in the fourth quarter, which is pretty much close to the recession mark of 2.5%. So the starting point was weak. And then if you have some doubts on the recovery, that's what the rate markets were actually worried about.
Yeah. Libby, I'm curious, back to politics for a second. When you, as you do probably and I do, when you spend your time on the phone or meeting or talking with people in New York who are in the business community, Bloomberg's name comes up a lot.
Yep.
His strategy is obviously focused on what you just talked about, Super Tuesday. Is he helped at all by this disarray in Iowa, and do his poll numbers moving up mean anything of significance for him?
Yeah, look, I think this is a win for Bloomberg, especially if the early indications are true that Vice President Biden did not do as well as expected. So this absolutely creates a wider lane for former Mayor Bloomberg. However, and this is, again, what we're talking to our clients, to get the nomination, it's just a simple math question. You just need a simple majority of the delegates. And as long as you have a crowded field, there is a chance that no one candidate is able to secure the nomination. And again, that would force a broker convention. And in that case, that actually may help Bloomberg. Bloomberg might be helped because that's when superdelegates cast a vote. So I think bottom line here is that this just underscores that the race is wide open for the Democratic nomination. And I think from a market's perspective, to make any sort of investment decisions or positioning changes based on early indications, it's just too premature.
Are you expecting anything as it relates to, I don't know, economic policy or things Wall Street should care about out of the State of the Union tonight?
Look, I think that President Trump will take this opportunity to do a victory lap, right? He'll talk about the strong economy, and we would agree with Morgan Stanley that, from a Pimco perspective, that things are slowing, but are still manageable. And I think the president will be able to spin this as, victory from a trade perspective, the USMCA, the Phase 1 trade deal. He'll talk about, some, increase in government spending. So I think he'll use this opportunity as sort of a victory lap, rehash kind of his greatest hits, but we're not expecting from a market's perspective anything too new. The exception to that is that we might get some indication about how they're thinking about Phase 2. We're not optimistic that you see a Phase 2 or even real traction on Phase 2 with China and the U.S. before the election, but we might get some indications of that from his speech.
China did say overnight they don't expect the virus to impede their ability to meet their Phase 1 obligations or commitments. Any reason to think why they wouldn't be able to? And if they didn't, how would the U.S. respond?
I think it depends upon how long this virus lasts. I mean, to the extent to which it looks like it's probably maybe just 2 months disruption, then it should be possible for them to actually fulfill those terms. But if it really drags into 4 to 6 months, I think then they will have to come back to the U.S. and say, look, this is difficult for us to actually execute.
And would we hit them or help them?
From Pimco's perspective, especially as it relates to the agricultural commitments, you're talking about $40 billion of purchases every year. $25 billion was their maximum historically. That delta might be hard to make up, given sort of the growth dynamics in China. So we already thought that these were aspirational numbers to begin with, and I think this makes it, maybe more difficult for them to attain.
Does this make the Fed cut rates this year, Chetan? When does that happen?
Well, no, I think at this point of time, it's still too early to call for a rate cut from the Fed because, as you heard from Chair Clarida saying on interview on a TV channel, saying that, if you have 1 to 2 quarter disruption, it should still not call for a rate cut. And I think at this point of time, it doesn't look like it's probably going to be more than 1 quarter. So, yeah, if we get an evidence of this being more long-lasting, then it will raise the question of rate cuts. But at this point of time, no.